Alright, in this video I'm going to be sharing with you a CTS trade that we took. We was looking at it this morning in the live room on the Eurodollar. I posted it out on TradingView right here this morning, way before it started playing out, so you guys can follow along. And I just want to recap on that trade, talk you through the process, and give you some insights into how we approach using that CTS method. So enjoy. Alright guys, welcome to the Trading Edge video. Going to share with you a couple of trades. One, we did get shaken up in the markets yesterday. I got profits, target one profits on dollar yen. I got stopped out of the Aussie CAD, and I'm now looking for potential bullish opportunities on that. I'm just waiting for a pullback on the Aussie CAD for a little day trade. Same with the Aussie dollar. And what I want to share with you is a trade that I'm looking at on the Eurodollar. So first of all, this is the daily time frame. Okay, and we've had this really nice bounce off of this 1300 level, this psychological even handle number. Very strong level of structure on this market. And you can see previously had this nice pin bar, this 3-bar reversal, doji candle, low test candle. We had the 3-bar reversal when we bounced off of that level. When we came back down again, RSI went again, pushed down to oversold. We bounced straight off of that level, and what we're doing it now is we're in this pullback. You can see that we are putting in this pullback, and what I want to share with you is if you're familiar with the CTS scoring system. So if you're a CTS trader, a structure-based trader, the first thing we're looking at here is the equal measured move. So where does the equal measured move land us if we're to push up? Well, you can see that we're right at that 1500 even handle number. Now the 1500 even handle number in this market has some really strong significance, and if we just zoom out and look at historical data, you're going to see that each time that this was tested, look at this, right? 1, 2, push down, 3, 4, became resistance, 5, and we came up, resistance, 6, 7, and we're approaching that level again. So it's considered a major level of structure. So not only do we have an equal measured move, but we also have that 1500 psychological number, and it's a major level of structure. So the next thing we can do is we can start building out some confluence, some confirmation that there's a high probability short at this level. Is what we're looking at is we're trying to think like as many traders as possible, all the other traders, and trying to identify those high probability zones where we're likely to see multiple sell orders come into play. So what the next thing I'm going to do, so for instance, if you're trading equal measured moves, you might have a sell order here. If you're trading off of pure structure, you know, these major structure levels, you might have sell orders here. But what I'm going to do is bring on some fibs. So I'm going to bring on a fib extension tool, go from low to high. You're going to see we've got a 127 extension in that zone as well. Right, so let's just clear these off. So we've got a 127. We can also bring in our fib extension and use it as an inversion. And you're going to see that we've got that 1414 lining up perfectly at that 1500 level as well. And then lastly, what I'm going to do is I'm going to bring on the fib retracement tool and go from swing high to swing low, and you're going to see that we've got that 618 retracement lining up in that zone as well. Okay, so let's just clear these off. So the 618, the golden ratio, the golden mean, right? Very decent level. So you can already see that we've got a really nice high probability trading opportunity here for a short. Now, the question is how to get in. But before we do that, I just want to look left here at what happened previously when we approached this level. Look at what happened here. As we approached, we pulled back up. Look what happened. There was some buying pressure, and then there was the selling pressure. The bears slapped the bulls in the face, and we had this high test candle wick before eventually pushing to the upside. Then when we did that again, look, see the similar thing happen. We had this high test candle wick here, where there was selling pressure. The bulls were being slapped in the face again, and the bears continued down. So we want to bear this in mind, because if we're looking at placing stop loss, we want to know that it's in a very an area that provides a low probability of us being stopped out. We don't want our stop order being filled, but at the same time, we want it at a level that's going to provide us, it's going to get us out as soon as we know that the market's not behaving as we predicted, but also that's going to give us a nice risk-reward ratio as well. So we want to bear this in mind. So we've got this level here. If we're using this as, if we just bring on the ATR, I think it's about 38 pips. 40 pip ATR. So say for instance we just waited for a push up and entered aggressively. You're going to want about 40 pips above this high, above this area here, which is going to be up at around that zone anyway. All right, so you want to bear that in mind. You want to get just above that. Or you might wait for this candle formation to play out again. So you might wait for this to happen again, some kind of high test candle wick. You wait for the close and then set a sell stop order maybe. But you're waiting for confirmation, and then once you've got that confirmation, or once you've got your entry order ready to go, or your rules met, ready to enter short, you can get your stop loss in, but you want to make sure you're getting a 1-to-1. Now, where are you going to take your targets? Well, for me, if I'm up at 58, I'm looking at structure here, and we know, if we look at this level here, right, we've got this previous structure level here. Okay, so we had previous structure resistance here, but also 1, 2, 3 support at that level as well. So if I was taking targets, I really wouldn't be comfortable taking targets beyond this point here, which means this might just be a 1-to-1 trade. Okay, so that's all good as long as this is a high strike rate trade. Okay, you might be happy with that. But another thing you can do, so just to go through the different entries, you could be aggressive and just set a limit. That's going to be a low strike rate trade. You could wait for confirmation, so you could wait for a candle like this and get this 3-bar reversal. You could wait for a 3-bar reversal, and then you could put a sell stop order, so a few pips below the low of the close, and then you wait to be triggered in. Or you could just wait for the confirmation candle, then enter at market after it's closed. Or what you can do is you can drop down to the lower time frame, and you can say, right, well, I'm going to wait for market to push up. I'm going to wait for RSI to go overbought. I'm going to wait for a double top. And then if we get a valid double top, I'm going to put an ATR based stop above the double top, reducing your risk down to this much, and then look to capitalize on the move with a great reward to risk ratio. But it's about being patient. Either way, you're going to have to wait. It's not about just taking the trade early. We're waiting, we're watching price, understanding where the high probability zones are, and then we're entering into those high probability trades. We're not just rushing to be in a trade because we feel like we should be in a trade. So the other trade that it looks like I'm just about to be triggered into, or I've just been triggered into, is this New Zealand dollar trade. Okay, so this is a trade where I'm looking to take targets at the top of this VS1 zone. And I've just been triggered into this. This is an ascending channel. You can see we've got bearish divergence on the RSI. We've approached major structure resistance looking left, and we're putting this ascending channel. So what I'm going to do is I'm entering here. I've got my stop loss just above the 68 flat level at 68.02, that should be. And what I'm going to be doing is taking my target right here.
Order pending.
So you can see it's a very nice risk reward as well. So we'll see how this one goes. Anything else? Yeah, the day trades on the Aussie CAD. I'm waiting for a pullback. We just had this breakout here, waiting for a pullback into this zone and looking to buy this up for a retest of the highs. And I'll be trailing that one up if we can get in early enough. And similar situation on the Aussie dollar. So this one's not as attractive as the Aussie CAD. So we'll keep an eye out on the Aussie CAD, and if anything changes, I'll keep you updated. All right, welcome back. Hope you had a good day in the markets. Just been for a run. That's why I'm wearing this fluorescent top. This is a trading edge video. This is something we put out every day, and normally we sort of pull out what's on the radar for the next coming day or the next trading day or the next couple of days, bearing in mind any high impact news releases that we want to pay attention to. But I just want to follow up because I think this makes a really good video just to show you the process of the CTS, because we started off looking at this CTS trade this morning. I just want to carry on, particularly if you guys are in the platform and you're just looking at this CTS system. because you can see we rolled over and we actually hit the target zone. So this played out absolutely perfectly. The analysis was absolutely spot on. You know, that's what happens when you can identify these high probability zones. People think that this technical analysis stuff is rubbish. It's not. This is how I earn this is how I earn consistent profits out of the market. So this is an actual skill. Understanding how to read price is an actual skill, and if you don't understand how to read price, I highly recommend that you stop whatever you're doing, whatever strategy you're learning, whatever golden goose you're trying to find, and just go back and learn the basics, because it's going to pay in the long run. But I want to talk you through the entries on this, because although it played out beautifully, the only entries I mentioned earlier were the double top, or the sort of the trading time frame entry. I didn't really mention the couple of entry techniques that I teach inside the platform, which are candlestick formations. So there's 3 types of candlestick formations that we look for when we're entering in one of these high probability zones. One is the doji candle. So doji is a indecision candle, and the sort of anatomy of a doji looks like this. The market opens, bulls push up, bears push down, bulls push up, market closes at the same price as we opened, and there's indecision. It's like a bit like a tug of war, and there's no winner. The second candlestick formation I look for is a high test candle wick, and that essentially is this one here, where you've got the high of the candle is nice and high compared to the body of the candle, and normally the open and the close in the lower 30%. And the third candlestick formation pattern that I look for are tweezer tops. Now we've actually got all 3 of those in this zone, okay? And because we've got all 3 of those in this zone, that gives us extra confirmation, and the way that I enter is slightly different. Instead of having an ATR based stop, what I do is I set a sell stop order just a couple of pips below the low, 2 pips below the low of this close. Okay, so it was this one, and then we got the second candlestick, so I tightened up the order a bit, and as soon as I was triggered into the trade, then you set the buy stop order, the stop loss order, 5 pips above the high. So I'm looking at, I had my I was above that 1500 even handle, so I was at 1505, and then just let it run. If you get triggered in, you just literally let the trade run. I don't trail stops or anything like that. Remember, I wasn't being greedy on this trade. It's not a trend trade or a trend continuation trade. It's not really a counter trend trade either. It's just a structure based trade using that confluence, those filters of a high probability zone. You can see the VS1 zone is already printed on here as well. And that was it. So it was an in-out, quick 50 pips. And that I just wanted to share that with you, because lots of people are getting a bit overwhelmed with, they think they've got to know everything about everything, but the problem is they start learning too many indicators, too many strategies. They learn about Bollinger Bands, MACD, moving averages. They learn all these different indicators, stochastics, RSI, and Ichimoku cloud. They learn all this different stuff, and it just ends up clouding their mind, and they become paralyzed from taking a trade. What you want to do is you want to have a way of building objective rules to entering a trade. And once you can identify these high probability zones, all it's a case of doing is refining and tweaking your system so that you can get the optimum capitalization out of the trade, out of the move. And that's what we do. We test the strategy. We then go and trade the strategy. We journal the strategy. We journal our results, and then we tweak it over time. So this isn't witchcraft. It's an actual skill. If you want to learn how to read price, we teach this stuff in the foundation course of the platform just before you start cooking on gas. If you want to go and check that out, please feel free. The other trade that I'm in, it just still, we're in the red slightly, it isn't doing as well. It's not really a big risk trade. It's not really a big profit trade, but it's still 40 odd pips. So Still in this, hoping we can roll over, and I'll update you inside the platform when we do. So until tomorrow in the live room, again, if you're interested in watching me trade live, so you get that exposure to real life trading environment, go over and take the trial. It's $1 for 2 weeks. Many people go in, they sign up for $1. After 2 days, they sign up for the membership. They don't even let the trial roll out. We've got something like a 48% conversion rate at the moment, which says a lot about the value inside the platform. So go over and check that out. If not, I'll see you in the live room, members. And until then, have a great rest of your day, and I'll see you then. All right, if you enjoyed this video and you want to see more like this, just let us know in the comments section below. Please share this video around as well for anyone interested in learning to trade. We're trying to teach people the right way, you know, not so much the shiny objects strategy, the tools, the strategy, and the community for accountability, and give them the highest possible chance of success. So links in below for the dollar trial. If you like this video, give it a thumbs up, share it around, and I'll see you next time.